Hello and welcome to the another class. In this class, we need to study our another new chapter, that is chapter number 5, recording business transaction and sale tax. Name is recording business transaction and sale tax, but we will also study what is bank reconciliation statement and what is discount. And when it comes to discount, we will study both types of discount, that is trade discount and settlement discount. Settlement discount is also known as cash discount. So what do we need to study in this chapter? We will study recording of business transaction, then we will study sale tax, then we will also study what is bank reconciliation statement, and then we will study regarding the trade discount and also regarding the cash discount, okay, which is also known as settlement discount. So in this chapter we need to study all these topics. So before starting what is business transaction and how business transaction are recorded, I need to tell you what are the basic rules of accounting. Okay, I assume that you may have studied what are basic accounting and what is the basic rules of accounting, but still I need to clarify and I need to tell you what are the three golden rules of accounting, so that if you have not studied commerce or accountancy in your school level, we will fresh start from here. Okay, so before going for the business transaction, we must read what are the golden three rules of, or we can say which are the three golden rules of the accounting. Okay, so first we will study a class with the three golden rules of accounting. Okay, three golden rules of accounting. We will study each rule one by one with the example, so that you will be able to understand how accounting is done. Then we go for the business transaction and the journal entry which are recorded for each business transaction. Okay, so let's start with the first golden rule, that is it is regarding the real account. It is regarding the real account and what it deals with. So real account deals with assets and liabilities. So real account deals with assets and liabilities. And what is the rule? The rule is that debit what comes in and credit what goes out. So what is the golden rule? That is first golden rule, that is debit what comes in and credit what goes out. And it is regarding the assets and liability. It is regarding the assets and liability. So whatever the asset is coming to you, you should debit it, and whatever the asset is going from you, you should credit it. And in the similar way, what is the liabilities that is going away, you need to debit them, and what are the liability that you are incurring or taking should be credited. So this is the first golden rule, that is regarding the real account which deals with asset and liability, and the rule is debit what comes in, credit what goes out. Okay, so this is the first rule. Now we will study what are the example related to each golden rule after studying all the three golden rules. So this is the first golden rule regarding real account. Then comes our second golden rule, that is personal account. That is regarding the personal account. And what is personal account? So it deals with persons and organization. Okay, so what is personal account? Personal account golden rules deals with persons and organization, and the rule is debit the receiver, credit the giver. Okay, so what is the rule? Rule is debit the receiver, credit the giver, and it deals with persons and organization. Suppose if John, a third party, has paid me cash. Suppose John, a third party, has paid me cash. So who has paid the cash? John. Who has paid the cash? John. So I will credit the John, because John is the giver. John is the giver. But suppose if I have paid certain amount of money to Peter. Suppose I have paid certain amount of money to Peter. So who has received the amount? Peter. So what I will do? I will debit the Peter, because debit is the receiver. So rule is debit the receiver, credit the giver. And this is regarding the personal account, that is it deals with persons in organization. So this is the second golden rule of accounting, that is debit the receiver, credit the giver. Now comes third rule, that is nominee, or you can say nominal account, and it deals with income oblique gains and expenditure oblique losses. So nominal account rule is it deals with income and gains, expenses and losses, and the rule is debit all the losses and expenditure and credit all the gains and income. So this is the third rule, which deals with income, gains, expenditure and losses, and the rule is debit all the expenditure and losses and credit all the incomes and gain. So suppose if I have gain, suppose if I have made a sale, if I have made a sale, so what is sale? Sale is my income, so I will credit the sale. But when it comes to purchase, so purchase is my expenditure, so what I will do? I will debit the purchase. Okay, so these are the three golden rules, that is first it deals with real account, that deals with asset and liability, and the rule is debit what comes in, credit what goes out. It is regarding the asset and liability. And then comes second rule, that is personal account, that is it deals with persons and organization, and the rule is debit the receiver, credit the giver. And then comes third rule, that is regarding nominal account, and it is about income and gains, expenditure and losses, and the rule is debit all the losses and expenditure and credit all the gains and income. So these are the three golden rules. These are the three golden rules. Now we will study the example by taking certain illustration. Okay, so suppose we take example number 1. Made a cash sales of dollar 1000. Okay, so this is my first case where I have made a cash sales of dollar 1000. Okay, so there are two elements in it. First one is cash and second one is sale. Okay, because I have made the sale on cash, so what I have received cash, and what I have done, I have made the sale. So there are two elements, first is cash, second is sale. Okay, now when it comes to cash, what is cash? Cash is my asset. We have already studied what are asset, liabilities, capital in our chapter 2. So, okay, so cash is my asset. But when it comes to sales, what is my sale? Sale is my income. Sale is my income. Okay, now when it comes to cash, what is cash? Cash is my asset. And if I look on the rules, so who deals with assets? So real account deals with asset. So cash is asset, and who deals with asset? Real account deals with asset. And the rule is debit what comes in, credit what goes out. Okay, so rule is debit what comes in, credit what goes out. So this is only regarding the asset and liability. The rule, that is debit what comes in, credit what goes out, is only regarding the asset or liabilities. Okay, so cash is my asset, and if I have made the cash sale, so what I have received? Cash. So the rule will apply, that is debit what comes in. Okay, so rule is debit what comes in. Then comes our second element, that is sale. So what is sale? Sale is a income. What is sale? Sale is a income. Then I'll look for the rule which deals with the sale. Then I'll look for the rule which deals with the sale. So my nominal account. The nominal account rules deals with the income. Okay, so sale is my income, so it deals with income. Okay, and the rule is debit all the losses and expenditure, credit all the gains and income. That is, credit all the gains and income, and sale is my income. So what rule will apply? That credit all the gains and income and income. So for first illustration where I have made a cash sale of $1,000, there are two elements, cash and sale. Cash is my asset and sale is my income. Who deals with asset? Asset deals with real account. And rule is debit what comes in, credit what goes out. So rule applies that debit what comes in. Then I have to look on the another element, that is sale. So what is sale? Sale is a income. And who deals with income? The nominal account rule deals with income. And the rule is debit all the losses and expenditure and credit all the income and gain. So sale is my income. So what I do? I do credit all the gains and income. So this is the two element and these are the rule. Now I have to apply this rule while making a journal entry. Now I have to apply these rules while making a journal entry. So what I will do? My answer will be that I have to debit. First we will do debit on the journal entry and then we do credit. So first I have to do debit. So what I will do? I will do debit, that is cash account debited, cash account debited to, now comes the credit part. First we have done debit, now comes credit part. To what? So to credit all the income and gains. So what is my income? Sales. So cash account debit to sales account dollar 1,000, dollar 1,000. Okay. So what are the rules? Rules are debit the asset and credit the income. So my journal entry is cash account debit to sales. And what will be my narration? My narration will be being cash sales recorded. Okay. Narration can be anything which is easy to explain. Okay. So my narration is being cash sales recorded. Okay. So this is the first illustration that we have done regarding the journal entry and the golden rules of accounting. Then comes my second illustration. Then comes my second illustration, that is made credit sale of dollar 2,000 to Mr. John. Okay, so what is my second illustration? That I have made credit sales of dollar 2,000 to Mr. John. Okay, now here comes two part. First is Mr. John and second is sales. Now here comes two elements. First one is Mr. John, second one is sale. Now this sale is regarding credit sale. This sale is a credit sale. So I did not have received any money. I did not have received any cash or any bank amount or any money for this sale because this is a credit sale. Okay, so who have made the sale? I have made the sale to Mr. John. And what is I have done? I have done sale. So there are two elements, Mr. John and sales. Now I have to look what rule to apply to record a journal entry. Okay, so who is Mr. John? First, who is Mr. John? So Mr. John is a person. Mr. John is a person. Now I have to look at the rules that who deals with person. Now I have to look on the rules that who deals with person. So if I go on the rules, then I will see that there is a second rule, that is regarding the personal account, which deals with persons and organization. There is a personal account rule that deals with person and organization. Okay. So rule says debit the receiver, credit the giver. What rule says? The rule says credit the receiver and credit the giver. So debit the receiver, credit the giver. Rule is saying this. Now I have made sale to Mr. John. I have made the sale to Mr. John. So who is Mr. John? Is he the receiver or he is the giver? Who is Mr. John if I have made credit sales to him? So who is Mr. John? Mr. John is either receiver or either giver. Mr. John is a receiver. Mr. John is a receiver because he has received goods. Because he has received goods. I have given credit goods. I have given goods on credit sales to him. So he has received the goods. So he is the receiver. So what to do with receiver? Debit the receiver. Rule is saying debit the receiver. So what I will do? The rule is saying debit the receiver. Okay, so rule is saying debit the receiver. Then comes our second element, that is sales. That comes our second element, that is sale. So in earlier illustration also we have understood what is sale. So sale is a income. Sale is a income, and who deals with income? The nominal account rule deals with income, that is credit all the income and gains. So rule is saying credit all the income and gains. So rule is saying credit all the incomes and gain. So what are the rules that applies to my two element? That is first debit the receiver and second credit the income and gain, that is the sale. So my journal entry will be like Mr. John accounts debited to sales account amounting to $2,000 amounting to $2,000. So my journal entry will be John account debited to sales, and narration will be being goods sold on credit to Mr. John. So this will be my narration. So till now we have understood two illustration where first one was regarding the cash sale and second one was regarding the credit sales. Now comes illustration number 3 or example number 3, which will be regarding the sales return. Okay, first before starting the illustration 3, tell me, when it comes to sales return, so who will do the sale return? If there is a two party, first party has done the credits, first party has done the cash sales because I have done the cash sale to him, and the second party is where I have done the sales on credit basis. Okay, so there are two parties. First, who I have sold goods on cash, and second, who I have sold goods on credit. So when I have sold goods to cash, so I have received cash and I have given goods to him, and there is a second person who have sold goods on credit basis, so still I have to take money from him. Now when it comes to sale returns, what is sale return? When the seller, that is I am the seller, I will receive goods back from my customer. I will receive goods back from my customer, that is sales return. So in what case sale return is possible? In the case where sale is done on a cash basis or where the sale is done on the credit basis. So in accounting terms, the basic assumption is that the credit sale is more easy for sales return, or I can say the sales return are more possible or accepted when it comes to credit sale. Okay, because I have not received the money, the customer has not paid me the money, so he can return the goods to me in case of defective or faulty products. Okay, so when it comes to sales return, the goods are mostly on the credit basis. The goods are mostly on the credit basis. Okay, so now we will study something regarding sales return. So suppose in the illustration number 2, who have sold goods on credit? Mr. John. So in illustration 3, let's suppose Mr. John has found out that some of the goods which is sold by me to him are defective. Some of the goods which I have sold to him are defective, and he has decided to return back some of the goods. Okay, so illustration 3 is that Mr. John returned back goods sold to him of value $800 as sales return. So what is illustration 3 or example 3? That Mr. John, who have sold goods on illustration number 2, has returned back some of the goods of the value $800 as sales return, as sales return. So there are now two elements. First element is again Mr. John, again Mr. John, and there is another element that is sales return, that is sales return. Okay, so there are two elements. First is Mr. John, second is sales return. Okay, now first we will deal with Mr. John. So who is Mr. John? Mr. John is a person. Who is Mr. John? Mr. John is a person. And when it comes to rules, who deals with person? So rule number 2, that is personal account rules, deal with person, that says debit the receiver, credit the giver. Now in illustration 3, Mr. John has written goods to me. Mr. John has written goods to me. So who is receiver and who is giver? Who is going to be the receiver? Who is going to be the giver? So now Mr. John has given back goods to me. So he is the giver and I am the receiver. Who he is the giver, I am the receiver. But do I will record myself in my own books? No, because I am recording journal entry on my point of view. So I will not record myself in my own books. I will not record myself in my own book. So for my books, who is giver? Mr. John is the giver, and who is receiver? For him, I am the receiver. So who is giver? Mr. John. And what is, when it comes to giver, what is rule? Rule is saying credit the giver. What rule is saying? Rule is saying credit the giver. Okay. So Mr. John is a person who is also a giver in this case, and he was the receiver in illustration number 2. Okay. So in example number 3, Mr. John is a person who is the giver. And when it comes to giver, the rule says credit the giver. Rule is saying credit the giver. Okay, so first rule is done. Now comes to our second element, that is sales return. That is sales return. If you remember what we have studied in chapter number 4 regarding sales return. So what is sales return? It is regarding the send back of goods by the customer. Okay, so what you will do, either there are two choices, either record it as either record it as sales return and then reduce it from total sales in the statement of profit or loss. So there are either first choice of treatment is to record it as sales return and then reduce it from total sales in statement of profit or loss, or you have the another choice is to record in sales only, record in sales only. So sales return is opposite. Okay, if sale is a credit, sale return is a debit. Or if you don't record it as a sale return, what you will do? You will debit the sales. You will do debit the sales. It will have the same impact. Okay, so these are the treatment which we have discussed in chapter 4. Okay, I have just make you revise the treatment of sale return. So now when it comes to sale return, so what is sale return? It is the opposite of sale. It is the opposite of sale. Okay, so if sale is opposite of sale, and if sale was the income, and if sale is the sale return is the opposite of sale, and if sale was the income, so what is sale return? Sale return is the expense. Sale return is the expense. Okay, or you can say reverse of income, because sales was the income and sale return is the expense, reverse of sale. So what is it? It is a reverse of income. Okay, now, or you can say the opposite of income. Okay, this is the more better word as compared to reverse. Now when it comes to treatment, so sale is the income, sale was the income and it was dealt with nominal account, and the rule is debit all the losses and expenditure, credit all the income and gains. So sale return is not income, So what it will become? It will become the expenditure. It will become the expenditure. And what rule is saying? Debit all the losses and expenditure. What rule is saying? Rule is saying debit all the losses and expenditure. Okay, so if we apply the same rule here, if we apply the sale rule here, my rule will be debit all the losses and expenditure. It will say that debit all the losses and expenditure. Okay, so now we have applied both the rules on both the elements. Now comes to journal entry. Now it comes to journal entry. So what will be my journal entry? First is credit the giver, and first and second is debit the losses. Okay, so what I will do first? I will do debit entry. So my debit will be sales return account debited to giver. So who is giver? Mr. John is the giver. So I will do credit to Mr. John. So my journal entry is sales return account debit to Mr. John. To Mr. John account with the value of dollar 800, dollar 800, and my narration will be being sales return from Mr. John recorded. Okay, so my narration will be being sales written from Mr. John recorded. So what we have studied till now, we have studied three example or three illustration, where first one was regarding cash sales, where we have done the entry cash account debit to sale, because cash is asset and asset is a debit what comes in, and sales is a income, and rule says credit all the income and gain. Then we have studied second example where it was the case of credit sale. So there was the credit sale to Mr. John. And who is Mr. John? Mr. John is a person. And rule says debit the receiver, credit the giver. So who is the Mr. John? Mr. John was the receiver because he has received goods from me. So what I have done? I have done debited Mr. John and credited the sales. So entry becomes John account debit to sales account. Then comes third example where there was a sale return from Mr. John about $800. So when it comes to sales return, so what becomes who? Who becomes what? So the Mr. John becomes giver and I become the receiver. But I will not record myself in my own books. So I will record Mr. John. So John becomes giver. And when it comes to rule regarding the giver, the rule is saying credit the giver. And when it comes to sale return is the opposite of sale. So if sale was the income and rule applies that credit all the income and gains, and sale return is the opposite of income, the rule will be debit all the income and debit all the losses and expenditure. So my journal entry is sales return account debit to Mr. John, because when I have sold goods to Mr. John $2,000, I have to take $2,000 from Mr. John. So there was a debit of $2,000 because Mr. John is my asset. I have to take money from him, that is about $2,000. But when I have done sale return, when he has done sale return to me about $800, so what amount do I have to take it from now? $1,200, because 2000 minus 800. So he was done debited 2000 and now I have done credit Mr. John 800. So net becomes $1,200. So these are the three illustration through which we have understood the three golden rules. Okay, so we have studied cash sales, credit sales, and sale return. Now we will go for another or more example to study cash purchase, credit purchase, and purchase return. Okay, so comes again illustration number or example number 4. So example is made cash purchase of $5,000. Okay, now I have made cash purchase of $5,000. Now there are two elements. First one is purchase and second one is cash. In the above transaction there are two elements. First one is purchase, second one is cash. When it comes to purchase, so what is my purchase? Purchase is my expenditure. Purchase is my expenditure. We have studied in chapter 2 what is purchase, what is sale. Purchase is expenditure, sale is income. And when it comes to cash, what is my cash? Cash is my asset. Cash is my asset. Okay, so there are two elements in this illustration, that is purchase and cash. And what is purchase? Purchase is my expenditure. So when it comes to expenditure, we must go to the rule who deals with the expenditure. Okay, so who deals with the expenditure rule? The nominal account rule deals with the expenditure. Which says debit all the losses and expenditure. Which says debit all the losses and expenditure. Okay, so if we apply this rule, so rule is saying debit all the losses and expenditure. So we will write debit all the losses and expenditure. Okay, so this is the rule. And then when it comes to asset, who deals with asset? So real account deals with asset, and rule will say that debit what comes in, credit what goes out. So when I have done cash purchase, so I have received goods and I have given cash. So what goes from me? So cash has been goes out from me. So cash goes out from me. So what I will do? Credit was goes comes. Sorry. What I will do? Credit was goes out. Credit what goes out. So this is the rule. Okay, because I am paying the cash. So rule is credit what goes out. Okay, so this is the rule. Now if we do the entry, based on this, my entry will be, first I will do debit. So my debit will be purchase account debited to cash account, because purchase was debit, cash has to be credit, of dollar 5,000, of dollar 5,000, and my narration will be being goods purchased on cash, being goods purchased on cash. So this will be my illustration 4 regarding cash purchase. Okay, so these are the four illustrations that we have studied till now. I am giving you 5 minutes to read all this in full screen mode, then we will go for the illustration 5, 6, and then so on, to understand all types of business transaction based on golden rules of accounting. Okay, so I am putting the screen on full screen mode so that you can read it easily, then we will continue with our more illustration. Okay, so please read it and then we will proceed further. Okay, so I think you are done with reading all the four illustration. Now we will come with another illustration, that is illustration number 5. Okay, and it is regarding the credit purchase. So illustration is made credit purchase of $8,000 to Mr. Peter. Okay, sorry, from Mr. Peter. So illustration is made credit purchase of $8,000 from Mr. Peter. So now comes two element. First element is Mr. Sorry, first element is, let's take first element is purchase. Okay, so that you can easily understand. And second element is Mr. Peter. So for purchase we have already seen what is purchase. So purchase is a expenditure and rule says debit all the losses and expenditure. Okay, so purchase is a expenditure, and when it comes to rule, the rule is saying debit all the losses and expenditure. Okay, so this is the rule. Now comes our second element, that is Mr. Peter. So when it comes to a person, so who deals with person? So it deals with personal account. It is dealt by personal account, and rule says debit the receiver, credit the giver. Rule says debit the receiver, credit the giver. So in this case, who is the receiver, who is the giver? If I have purchased goods from Mr. Peter, so Peter is giver, I am the receiver, but I cannot record myself in my own book, so I will record Mr. Peter. So who is Mr. Peter? Mr. Peter is the giver. And when it comes to giver, rule says credit the giver. Rule is saying credit the giver. So now it comes to Mr. Peter, and he is a person. The rule will apply that credit the giver. Rule will say credit the giver, and based on this rule my journal entry will be purchase account debit to Mr. Peter. Okay, because rule has told us to credit Mr. Peter. So entry becomes purchase account debit to Mr. Peter, account $8,000, $8,000, and the narration will be being goods purchased on credit from Mr. Peter. So this is the narration regarding the above illustration, that is regarding credit purchase. Okay, so we have seen cash purchase, we have seen credit purchase, and by following the rhythm we will go for the purchase return, that is illustration number 6. We will go for the illustration which is based on purchase return. So now I have purchased goods from Mr. Peter on credit, and I have found out that some of the goods which is supplied by Mr. Peter to me is defective. So what I will do, I will return those goods to Mr. Peter. I will return those goods to Mr. Peter. So that will be my purchase return. And that will be his sales return, because I have given goods back to him. What he has done, he has sold goods to me. So it will be sale return on his part, and it will be purchase return on my part. So I have to record journal entry based on my point of view, not his point of view. So I will record purchase return. So now understand what is the illustration. Illustration is made purchase return to Mr. Peter of dollar, let's take 500 for goods being defective. For goods being defective. So what does illustration say? That made purchase return to Mr. Peter of dollar 500 for goods being defective. Okay, so this is the illustration. Now here comes again two parts. First one is purchase return and second one is Mr. Peter. Okay, now when it comes to Mr. Peter, we will understand that now I have given goods back to Mr. Peter. I have given goods back to Mr. Peter. So who is Mr. Peter now? Mr. Peter is the receiver because I have given goods to him. So he is the receiver, I am the giver. He is the receiver. Okay. Now Mr. Peter is a receiver. And when it comes to rules regarding the receiver, the rule is saying debit the receiver. Rule is saying debit the receiver. Okay, so I will apply the same rule. So the rule is debit the receiver. Okay. Now comes to our another element, that is purchase return. Okay, so just like sale return, it is also the opposite of purchase. So there are two choices. First, recorded as purchase return and then reduce it from total purchases in the statement of profit or loss. So you can either do this or you can record it as purchase. So purchase is a debit, but purchase return is the opposite. So what you will do when you are recording as a purchase, you will do credit entry. So the rule is either you can record it as a purchase return and then subtract it from the total purchases in the statement of profit or loss, or you can record it as a purchase and it will be reduced from the total purchases. Okay, that we have studied in chapter 2. Okay, and also in chapter 4. Okay, when we have studied the business transactions. Okay, so this is the accounting treatment. Now what is purchase return? So purchase was the expenditure, so it will be my income, or you can say opposite of expenditure, or you can say it is the opposite of the expenditure. Okay, now when it becomes income or opposite of expenditure, the rule will apply is nominal account rule. The rule that apply is nominal account rule, and it is saying that credit all the gains in income. It is saying credit all the gains in income. So I will do the same thing on this element. I will do the same thing, that I will credit all the gains in income. Okay, so after applying the rules on this element on illustration number 6, my journal entry becomes that Mr. Peter accounts debited to purchase return account. What my entry is? My entry is Mr. Peter account debited to purchase return account of dollar 500 of dollar 500, and narration will be that being goods returned to Mr. Peter recorded. Okay, being goods returned to Mr. Peter recorded. This is the narration of this journal entry, that is Mr. Peter account debited to purchase return based on rules of accounting, based on 3 golden rules of accounting. Okay, So till now we have studied 6 illustration. First one was cash purchase, cash sales, then credit sale, then sales return, then cash purchase, credit purchase, and purchase return. So we have studied 6 illustration till now. Now comes again, that is our another illustration, that is illustration number 7, or you can say my example number 7. Okay. Now I have made credit sales to Mr. John and I have done credit purchase from Mr. Peter. So what I have to do? I have to receive money from Mr. John. I have to give money to Mr. Peter. Okay. So now we will study about receipt. We will study about receipt when what happens when we receive the money from our receivable, from our trade receivable. Okay. So illustration is received $1200 from Mr. John. Received $1200 from Mr. John. Now, if you have forgotten, so what happened? I have made $2000 of sale to Mr. John. Then what happened? He has written $800 of goods to me. So it is sale written by Mr. John. Okay, so what is remaining from him to take? That is $1200 is due from Mr. John. So this is the summary of his transaction till now. Okay, so now what happens in our illustration 7? I have received $1200 from Mr. John in cash. Okay, so what happens? I have received $1200 in cash from Mr. John. Now also comes two element. First one is cash, second one is Mr. John. First one is cash, second one is Mr. John. Okay, now when it comes to cash, what is cash? Cash is a asset. Cash is a asset. And when it comes to asset, who deals with this? Who deals with this? The real account rules deals with the asset. And what it says? It says debit what comes in, credit what goes out. So here Mr. John has paid cash to me. Mr. John has paid cash to me. So do I have received the cash or I have given the cash? I have received the cash. And rule is saying debit what comes in. So I will apply the rule, that is debit what comes in. So this is my rule. Okay. Now comes to Mr. John. So Mr. John is a person. Mr. John is a person. And who deals with person? The personal account rule deal with the person. That is debit the receiver, credit the giver. Now here Mr. John has given money to me. Mr. John has given money to me. So I am the receiver, but I cannot record myself in the book. So who is the giver? Mr. John, because he has given cash to me. So he is the giver. I will record Mr. John. And rule is saying credit the giver, and the rule says credit the giver. So by applying the rules on two elements, that is cash and Mr. John, my journal entry becomes cash account debit. My journal entry becomes cash account debit to Mr. John, account $1200, $1200, and my narration will be being cash received from Mr. John. Being cash received from Mr. John. So this is my journal entry. Okay. So this is my illustration number 7, where I have received money from my trade receivable, that is Mr. John. Okay. Now we comes to illustration number 8, that is example number 8, where now I have paid money to Mr. Peter. I have paid money to Mr. Peter. So illustration is paid money in form of cash to Mr. Peter dollar 7,500. Okay, now let me remind you who is Mr. Peter. So I have purchased goods amounting to $800 from Mr. Peter. Purchased from Mr. Peter on credit. Okay, then some of the goods were defective, so I have returned some of the goods to him, that is $500. So purchased return to Mr. Peter. So I have purchased $8,000 of goods from him. Then I have purchased return $500 goods to him. So net amounted to $7,500 to be paid to Mr. Peter. So this is the summary of transactions with Mr. Peter. Okay, this is the summary of transaction with Mr. Peter. Now we have paid money to Mr. Peter. So there comes another two elements. First one is cash. First one is cash. Okay, and second one is Mr. Peter. Then we'll apply the rule again. So what is cash? Cash is a asset. Cash is a asset. But in this case, we have paid money to Mr. Peter. So cash has been given out from us to him. Okay, I have given out the cash, and cash is an asset and deals with real account. And what rule says? Rule says debit what comes in, credit what goes out. So in here, in this case, cash is going out. So I will do what? Credit was goes out. So I will apply the rule, that is credit was goes out. So the rule is credit what goes out. Then comes to Mr. Peter. Then comes to Mr. Peter. Who is Mr. Peter? Mr. Peter is a person. Now, if I am giving cash to Mr. Peter, if I am giving cash to Mr. Peter, what Mr. Peter becomes? He becomes the receiver. I am the giver now and he is the receiver. But I cannot record myself in my own book because I am the giver. So I cannot record myself. So but I will record Mr. Peter. So I am the giver, Mr. Peter is the receiver. So I will record Mr. Peter, who is the receiver. And when it comes to rules regarding receiver, so personal account deals with rule, and it says the rule is debit the receiver, credit the giver. So rule is debit the receiver. Rule is debit the receiver. So while applying rules, my journal entry is supposed to be like this, that is Mr. Peter accounts debited to cash account $7,500, $7,500, and the narration will be being cash paid to Mr. Peter. My narration will be being cash paid to Mr. Peter. Okay, so this is the eighth example or eighth illustration regarding the applying three golden rules in various types of business transactions. Okay, so if I have to make a summary, so in illustration number 1, what we have done? We have done entry regarding the cash sales. We have done entry regarding the cash sales. Then in illustration number 2, we have made entry regarding the credit sales. Okay, so it becomes a total of sales. Illustration number 1 and 2 is regarding sale. Then comes illustration number 3, that is sales return. Okay, so it was regarding the sales return. Okay, then comes illustration number 4, that is about cash purchase. Okay, then we have done illustration number 5, that was regarding credit purchase. Okay, so cash purchase and credit purchase becomes total purchase. Then illustration number 6, it was about purchase return. It was about purchase return. Then comes example 7 or illustration 7, it was about receipt. It was about receipt of money. Then comes illustration 8, that was about the payment, where I have made payment to Mr. Peter. So till now we have studied these 8 examples or illustration where we have discussed different types of journal entry based on 3 golden rules. Okay, so around 1 hour we have to understand these entry. Okay, so we have studied all these transactions. Now comes to our note. So now comes to our note to understand what is the business transactions, and you will be surprised to know that we have covered these part, that we have, by taking illustration or example, we have covered what is sales. In sales we have studied cash sales, credit sale. Then we have studied what is sales return. Then we have studied in purchase about cash purchase and credit purchase. Then we have studied about purchase return, then receipt, and then payment. So in our 1 hour class, we have studied different types of business transaction, how to record this transaction based on 3 golden rules of accounting, and what will be the journal entry. So we have studied this in order to understand 3 golden rules. So if when it comes to cash sales, so entry will be cash account debit to sales. Entry will be cash account debit to sales. When it comes to credit sales, entry will be trade receivable account debit to sales, or you can say Mr. John, because Mr. John is a trade receivable. Now what is trade receivable, what is trade receivable, we will study in chapter 6. Okay, so this is regarding credit sale. Then comes sales return. So what is sale return? Sale return account debit to trade receivable, that is Mr. John. Okay, now, or you can also record sale account debit to trade receivable. Okay, either you can record this, either you can record this. Then comes cash purchase. So what is cash purchase? Purchase account debit to cash. Then then comes credit purchase. So purchase account debit to trade payable. Trade payable means Mr. Peter. Okay. Then comes purchase return. So trade payable account debit, that is Mr. Peter to purchase return, or you can record trade payable to purchase account. Then we have receipt, that is cash account debit, bank account debit to trade receivable, that is Mr. John. And we have last but not the least payment, that is trade receivable account debit, that is Mr. Peter to cash or bank. Okay, so these are the different types of business transaction of in our ACCA syllabus. Okay, so we have studied how to record this entry. So what I have done, I have used 3 golden rules in order to explain what are the business transaction and how to record this. And while understanding those, we have covered our these important topic in our syllabus. We have covered this important topic in our syllabus in a easy manner. Okay, so this is the notes what we have studied till now. Okay, where it is also a given note, that is purchase return and sales return are netted off from total purchase and total sales. Okay, so we know it that total purchase will be reduced by the purchase return and total sales will be reduced by sales return. So in this class we have studied types of business transactions and their journal entry. Okay, so we have completed one of the major part of this chapter. Then in next class we will go for petty cash book, then we will go for sales tax, and then bank reconciliation and discount. Okay, and then we will complete this chapter. And after completing chapter, what we do question solving from the question bank. Okay, so this is all for this lecture. If this lecture goes on YouTube, if you are watching this lecture on a YouTube, and if you want these notes, if you want this question bank, if you want this board notes, if you want this board note, so you can just comment, or you can just join the Telegram group and request me to give you these notes and board notes. I will give you it for free. Okay, so this is all for this class. We will see you in the next class. Thank you.